Welcome to this first podcast interview for my new channel, Global Real Estate Opportunities. In just 1 minute, I will begin the interview with Jimmy Ngai of Jubilee Capital, a Hong Kong-based company. He offers high-yield investment opportunities to his clients. They are direct property investments into single-family homes and multifamily homes in the city of Philadelphia. For those who are not familiar with the map, Philly is on the U.S. East Coast, about midway between New York City and Washington, D.C. There are extensive rail connections between the cities, and some people who live in Philly, a cheaper city, commute every day to jobs in New York City. For full disclosure, I will tell you that I have personally purchased one property from Jimmy's company, and I'm in the process of purchasing a second one. There were some sound issues at the beginning, but it does get better. I had to skip the first minute or so. Jimmy explained that he has been involved in property investing and packaging of property opportunities for over 12 years. Here he will describe the very good structure that he and his partner created for those who want to own property in a faraway place. The buyer owns the property and holds the title, but the headaches are removed with management contracts from an experienced and solid company with decades of experience in the Philly market. I will pick up the interview where Jimmy Ngai tells us why he chose this particular city from the dozens that he researched. How did you come across Philadelphia as a place to invest?
Well, initially, it wasn't on my radar at all. I was going to a B2B conference where developers are looking for agents in Singapore. But I was looking for other areas because I have never heard of Philadelphia before. Maybe I have, but it wasn't on my radar at all. But it didn't turn out. So eventually I was walking around and I bumped into this guy called Jay Welsh. And
so tell us about Jay. I mean, who is he? Where does he come from?
Well, he's a native Philadelphian, and he's doing property since I was 19. He's an accountant by trade, and he set up this company about 5 years ago called ABC. And he's been buying cheap properties, foreclosure properties, and he's doing it up. He's one-stop shop, and he's doing well. So I asked him, could you do this fix it with no matter what happened, we get a fixed return. And he said he will consider it. So I flew over there within a week, and I checked him out. And after about a month or so, we sign up and we'll start promoting his stuff.
Well, so actually he was in business already, but you have managed to find a new way of doing business with him that he hadn't been doing before.
That's correct.
Okay. Well, I'll ask you more about that shortly, how it works. But first, can you tell me why Philadelphia?
Well, there's several reasons. Well, the number one reason is because we are into real estate. Therefore, we want to make sure we get income. So therefore, make sure it will able to rent out. A lot of cities in America will promise you a high yield. I mean, in Hong Kong, in Asia, it's rare to get high yield, like double digit. But in America, I found out there's about 50 cities that can do a double-digit return. But not many cities that has got the criteria of Philadelphia. For example, the population has been growing for the last 7 years, every single year. And because of that, and there's the jobs, there's relatively low employment rate, about 4.7%. These are very important. Plus the vacancy rate is relatively low too, compared to the rest of the U.S. cities. So in order to make sure it's low risk, they're able to rent out relatively quickly, we've got to have this in mind, that it's got jobs.
Yeah, I mean, I'm from Detroit originally, and as you know, Detroit has had a huge loss of jobs and population too. And I think Philadelphia had a loss of population maybe half as much as Detroit. I think it lost about 30% of its population. Detroit lost 60%. But as you said, I mean, Philly started to grow again.
15 years ago or so, and it's been growing every year. So it's a pretty different situation. And I think there's something you might want to say as well about the transportation that exists in Philadelphia versus what exists in Detroit.
Sure. In Philadelphia, is a relatively walkable city. I think it's the fourth most walkable city in US. It's got MTR. I was going to say MTR, but it's got the underground, the metro. It has bus lines. It has the tram.
So all that good stuff is there already. They don't have to build it.
No, it's been there. The infrastructure's been there for a long time because it's an old city. They have the infrastructure there. And plus it's the third most busiest train station on the 30th Street in America.
You mentioned yields. I mean, what sort of yields would you see in the city, for most investors? Can you get more than the, 4% or so you get in Hong Kong?
Sure. If it was the same as Hong Kong, there's no point going over to America. Well, in Philadelphia, on average, you can get 17% gross return. We do it as a fixed return product with everything in, with no extra expenses. It's minimum 11% fixed.
So if I invest, let's say $100,000 and, my gross return is 15%, that would be $15,000 a year. And out of that $15,000, how much do your investors get?
Well, our investors get 11% fixed.
Okay, so instead of $15,000, they'll get $11,000 a year, and that difference, which is $4,000, that's covering a lot of costs, isn't it?
Well, it covers everything. It covers maintenance, or any time during the tenancy that has a problem. It covers that. If the tenant don't pay, if the tenant changes and there's a vacancy period, it covers everything. So there's no extra expenses during the period, 3 years.
Okay, so you've got a 3-year guarantee, and during that 3 years, the investor would make 11% on net, and that's just before his income tax. So they're getting 11% net, is that right?
That's correct.
And okay, and that's guaranteed for 3 years. And what happens at the end of 3 years?
Well, on the third 3 months, the property management will offer you a new contract. The terms and condition will probably be the same. Only thing difference is the return, because the rent is going up every single year, but he can't actually give you a fixed number what exactly in 3 years time he will able to give you. Like, would it be 12% or 13% or 14%? We're not sure. But at least on the contract, it will say the next renewal will be minimum 8%.
Okay, so you would make on your 100,000 investment, you make 11% pre-tax. That's 11,000 a year, and then at the end of 3 years, you take another look at the market. If the market's higher, you might get more than 11% if you can cover the costs, and he can pay 11%. But did you say he has a minimum guarantee even after the first 3 years?
Yes, on the contract it says there's minimum 8%.
Have you had any of your deals reach the 3-year anniversary yet?
No, we only been dealing with him for about 1 year and 4 months.
Okay.
Yep.
And how many property sales have you done so far in Philadelphia? How many houses?
I've done 43.
43.
We'll be doing the 44th soon.
That's not mine, is it?
It's going to be yours, yes.
Okay. Well, I guess I'm not at the front of the queue then. So what sort of buyers are you finding for these projects? Are they all expats or Hong Kong people buying too?
Mostly local people. You're my only expat.
Oh, okay. And how do they cope? That's a long way for them. And how do they cope with the distance and the unfamiliarity issues?
Well, that's the biggest thing I do, is the education. Is telling them why is it safe. They have a saying in Hong Kong, they have a saying in Chinese, buying a cow over the mountain. That's what they describe what we do. We're selling something that they haven't seen before. So it's a lot of education, telling them why is it safe, why is it good, why there's such a high yield on cash flow. That's what I do.
I see. And how many of them actually go over and have a look? I mean, I did, and I liked what I saw, which is why I bought the first place. And now the second place I'm buying actually without seeing it. So I guess that's some kind of a testimony to the confidence that, I've developed. But how many of your clients actually see the properties they buy?
I reckon only about 10% of my clients have ever saw their property in flesh. Majority, they just buy it. Of course, they can Google it and see the street view, but majority, they don't actually go there.
So, can you tell us, sort of the basic steps? How would the sales process work?
Well, you pick a property. We give you a list. If you like to choose yourself, we just let you choose. And then it's $5,000 deposit. Then you fill in the reservation form. Within a week, you will get your documents back. You can sign it, review it. Then afterwards, the balance. Then within 2 weeks, you get your electronic deed.
So you actually get the title electronically, is that right?
That's right. They call it an e-deed.
And how are people owning these properties? Are they owning them in their own names, or are they using something else?
Well, they can do if they want to, but we recommend them to only as a LLC, limited liability company, and we set that up for you, and we pay for the audit fee. We do everything for you, and so there's no expense.
So, in terms of filing taxes and so forth, that's all done by your company or by Jay's company.
That's correct. As long as you don't have other U.S. income.
Okay, so I mean, I think there's a graduated tax rate in the U.S. So if I buy one property and I make $11,000 net, like we said before, on a $100,000 property, have you got an idea what the tax would be on that $11,000?
Well,
if it's the only thing I have in the U.S., I mean, my own situation, I have, other investments there, so I have to look at that. But if I'm a Hong Kong person and this is my only investment and I have 11,000 income, maybe you don't have the number on the top of your head, but that would be determined, that would be your only income in the U.S., so it would be a pretty low tax rate, I imagine.
Yes, and what we do is, before you buy it, we actually give you a calculation of your tax you need to pay. So you know exactly how much not exactly, but you know a pretty good idea how much you will pay, so you won't have any surprises. Generally, on rule of thumb, net, my client will get about 9.5%, 9.7%, something like that.
Okay. Well, that's great. I mean, what I'd like to do is maybe in a subsequent podcast is talk about some of these stories, involved in various neighborhoods of Philadelphia. If there's a good response to this video, then we might have another one where we'll talk about areas like Brewery Town or West Philadelphia and some of the other areas we've been looking at, which,
sure.
Have maybe more. Are you expecting to make a capital gain on these properties?
Well, sure. Although we have a buyback option, but I always tell my client that's the worst thing that could happen is to sell it back to the developer in 3 years' time on the same price. So Philadelphia last year increased in price in 7.3%, but that's not common. Well, I'm expecting something like 4 to 5% per year appreciation.
Yeah, I mean, I have to say I was really lucky with mine because I paid about $75,000 for it, and Zillow, that was 6 months ago, and Zillow, actually 9 months ago now, Zillow now values that property at $94,000, and I know we can't necessarily sell at Zillow valuations, but it does show that there's been some upside in at least that neighborhood of Philadelphia.
Sure, everything is going up. I've just got a magazine cover, a real estate magazine cover from Philadelphia. It says, if you want to buy, you better be quick.
Okay, well, listen, Jimmy, I think that this might be a good point to stop this first conversation, and maybe if we have some interest here in Hong Kong, we can organize a meeting, and then people can hear more of the detail in person from you. would you be willing to attend and maybe help set up a meeting for
Sure.
investors?
Of course. No
I mean,
problem.
you've done that before, and last time I attended with you. One time we had Jay as well, but you had something like over 20 people come. So I guess you do this from time to time.
Yeah, in fact, I'm doing this almost week to week now.
Oh, okay. Well, that explains the 40 some odd properties. That's a lot of properties. How many staff do you have?
Staff, I've got 3 part-time staff. That's it.
Okay. Well, good. Well, thanks very much, Jimmy. And, I look forward to the next conversation and appreciate very much the opportunity to hear about this for our GREO listeners.
Thank you very much, Michael. Talk to you soon.
Bye now.